We talk about the overbought or the extreme overbought condition here. And also here, this is the overbought. Number 1, extreme overbought. 2, overbought. 3, that's an extreme overbought. We also discuss about the analog we can refer to here and compare to the current situation. It's just heading to the midline of the up channel. That could be one of the scenario that we can consider, like this, a pullback or some downsloping type of the consolidation. At least it's normalized back into the middle part of the up channel. First, we have this extreme overbought condition. That's a change of character bar comes with spike of the supply. The spread of the candle, this is significant last Wednesday candle, also a significant candle in terms of the supply level that's meaningful on par with the previous change of character bar. On Thursday, there was a stopping action, although it did not have a reversal. Next day, there is a shortening of the thrust to the downside. The thrust to the downside or the progress to the downside is getting shorter and shorter. That's the overflow of the downward momentum on Friday. On Monday, we have a technical rally or a relief rally. There is a stopping action. Demand come in on Thursday and also on Friday. If we look at the hourly chart, here is the down wave on Wednesday, and on Thursday, progress to the downside is getting shorter. From here, this is a progress to the downside, and then it's getting shorter from 1 to 2, and then into 3, shorter and shorter. That's exhaustion of the momentum. Consider with a lot of the effort behind, the volume is the effort. Try to push a price down, but look at the results to the downside. From 1, that's quite a lot of the progress, to 2, not too much, and to 3, so it's getting lesser and lesser. Momentum to the downside is exhausted with a lot of the effort behind. Suggests that there is demand come in on this 2 bar here on Thursday, and on Friday is a confirmation. On Monday, we have a rebound coming on the way up, but the rebound is not that great. In order for it to have a sustainable rally, we need to see at least to go up to about 2200. Still have another 200 points to go to test the more meaningful resistance. Come here, test, and then have pullback and eventually breakout. Then there's an upswing ongoing. If it just stall and fail at this point or this zone right here from 19,900 to about 2100, if it just hit the resistance zone and stop there, have a reversal bar, likely it's going to go down. If it come all the way, break out of the 2200, and then it will test this next target about 2500 to about here 400. That is the next meaningful target, but first it needs to overcome 2200. That is the immediate resistance level that I'm looking at. This is down wave. Look at the supply level here. This chunk of the supply level is considered relatively high. It's on par with the previous down wave. Let's compare the level, the supply, similar volume level. That's why we need another test, and then we need to judge the characteristics of the test, whether we'll still see a lot of the supply or whether we'll have a decrease of the supply. But because of the rotation is happening, I just have a bias for Nasdaq or the S&P 500 to have a lower low test, or at least some form of the consolidation rather than have this sharp rebound and then going up. Right now, a lot of the fund just rotate into the small cap and also the Dow Jones. It makes sense for Nasdaq and also the S&P 500 to take a pause, take a rest, take some time to consolidate. So it's not necessarily have a big reversal and to crash down, because look at the long-term trend. It's a well-established up channel. Even if it just come all the way back down here to about 1900 or even to this horizontal line, it's not that bearish. So it's just normalized back to the other end of the channel, hit the demand line. Hopefully it will attract the demand to support the price. That is the minor horizontal type of a support, 19735. That's the swing low support level. There is shortening of the trust to the downside, exhaustion of the momentum. We can expect some relief rally, but it would need to commit above 2200. That is a trigger level that I put in. Then it could go up to test the original of this selling bar. That's 2500 of. First thing that it really need to go is just 2200 test of this significant bar to the downside. We'll need to judge the quality of the relief rally, and it should have another leg down. Hopefully it won't have extensive downside, another lower low, or the best case is a higher low test, with decreasing of the supply, and then just consolidate from here, or just have this trading range form. That will be relatively bullish as we have some demand come in on Thursday, Friday, and also manifest on Monday. Hopefully the demand can sustain and also push it to 2200. If it breaks out of 2200, could challenge 2400 to 2500. If it stall and then just stop from here, fail from here, then likely it will just go down, have a lower low test. This is a more meaningful support level, 19,000. Immediate term, we need to judge the quality of the relief rally. Hopefully it will just form another range from here, and then going into election, then just break out.